welcome to Follow the Money. I'm Robert Tan. Join us as we explore the tools and insights you need to jumpstart your financial journey. The world of finance is changing in an economy shaped by disruption, inflation, and digital acceleration. The ability to read the signs and follow the money has never been more important. But beyond the headlines and the numbers, the real question is, where is opportunity truly growing, and how can the everyday Filipino make sense of it all? And joining us today on Follow the Money is Mark Angeles, a respected investment professional, finance strategist, and thought leader with deep experience in wealth management, capital markets, and economic research. With his sharp insights and grounded perspective, he helps demystify how financial systems work and how they can work better for more people. Good day, Mark. In today's conversation, Mark, welcome to Follow the Money.
Thanks for joining us today. Me here, Robert. Thank you.
Now, Mark, in today's conversation, we need to break it down. Now, what's moving in the market and where should we be looking?
Well, currently right now, it's all about the news flows on tariffs. So far, I believe that the president did mention that it will be extended to August 1, the U.S. president. So that will put a lot of perspective on how the tariffs will be for a lot of countries. So it's very important because it determines how much of an impact this tariff is going to be in terms of economic growth. So we do have some opportunities here and there, especially for us, if you look at the reciprocal tariffs, we're one of the lowest countries that were imposed tariff on by President Trump. And if that stays true for the finality of the tariffs, then we will benefit. We could see some trade flows go into the Philippines.
So a lot of in the future, you see a lot of inflows.
Potentially, if the tariffs is lower for us versus, for example, an example here is a tuna, right? Most of the tuna exports come from Thailand. If Thailand has a higher tariff, and we do have a tuna exporting here, which is at 10%, then on a relative cost basis, you're better off buying from the Philippines because it's still the same tuna that is you capture from the sea.
Now, Mark, how do we make smarter financial decisions now in a fast-moving world?
Yes. Well, actually, it's all about understanding, research, and education. We at First Metro Securities are advocate for financial literacy. So that's one. And all about looking into an investment that you do deep research on, or at least a top-down research, so you have an understanding on what you're getting into. So that's what we do at
Mark, you mentioned financial literacy. Here in the Philippines, are there enough Filipinos really literate in terms of looking at finance, investing, saving, their hard-earned money?
I think there's a lot of them, but my concern here is, or what I view is that most Filipinos right now, if they don't have the income, why look into investing? So the financial literacy is there, but once they're ready to invest, they're going to look more into financial literacy in order to increase their knowledge on investing.
Now, your June report highlights 5 winners such as P Gold, SM, RHI, JFC, and Wilcon, chosen for brand strength and pricing power. Now, how do Filipino retail investors discern which of these is best suited for their timeline and risk appetite in terms of investment?
Well, most of the picks are somewhat conservative. Right? You look at SM, it's the largest grocery retailer, the largest retailer in the Philippines. Pure Gold is the largest grocery retailer in the Philippines. Then you have RHI, which is similar to SM in terms of market model. Then you have Jollibee, which is a global brand, well-known, and the largest food service here, fast food service in the Philippines. If I'm looking at long-term, I'll be looking at SM and Jollibee, given their long-term potential, especially SM's link to the economy, where it's mainly a proxy to the Philippine economy. For Jollibee, it's growing really fast and really entrenched with the Filipino consumers. But if I'm looking at near term, I'm looking at those with high dividends. For example, Wilcon giving you 5% right now, Pure Gold around that range. So those factors allows me to monetize some of my investments as early on.
Now, looking at these companies, How does the investment appetite locally look now in terms of investing, depending on what's happening globally right now, geopolitical issues, pressures, and with the pending tariffs that are happening, and also what's happening locally? What kind of investment appetite do the Filipinos have now in terms of investing in the local market?
At least from our side, we're seeing a selectivity. Right, they're not yet going into the large cap glamour names like the SMs, the Ayalas, and the Metro Banks, right? So they're not yet there, but we're seeing a lot of interest from selected counters. For example, we have seen some consumer names outperform, like Pure Gold, Wilcon just recently. We did have some of the gaming hype here and there, and mining, because gold is an all-time high. So it's more on selectivity rather than broad-based risk appetite in investing in the Philippine equities market.
Now, when we look at inflation, it's easing to around 1.9% year to date. Yet, your report warns of margin pressure from disinflation. Now, how should investors interpret this? Is it a cause for celebration or a cause for caution?
Well, as for consumers, it's good for us because prices are coming down. As for investors looking to invest in consumer names, you have to realize if there's this inflation, means those consumer names cannot pass on prices. And right now, we're seeing mix in terms of performance of key raw materials. We have seen coffee, chocolate go up and down, all those factors. So that impacts that. Before, when we have high inflation, it was very easy to pass on prices because you can always blame it on inflation. Right now, it's quite difficult, especially for those households that are very sensitive to prices. They're unlikely to accept, oh, this is very high, maybe I should buy another brand, something like that.
Now, you also note that election stimulus boosts consumption, but is that just a short-lived bump? And how do investors find stocks that ride the cycle without crashing after the election hype?
Well, usually when you do have an election year, right, you have a boost in liquidity. That boost in liquidity usually has a momentum that spills over into the third quarter. That's what we're looking at. And also, by the time you hit the fourth quarter, it's already a holiday season. So you do have that momentum in terms of consumer spend. So you can look at election spend more of like a jumpstart to the consumption. So if I were to look at how to position, I prefer the retailers, because at the moment, in terms of FMB, it has to be selective, because some of them are going through different phases in terms of raw materials, in terms of competition, whereas a retailer is like you capture the overall spend. For example, if I want to buy this brand and it's not listed, then the retailers will benefit from that. Unlike if you are, for example, you are this brand of consumer good, and you don't appeal to that buyer at the moment, or in terms of disposable income or appetite, then you lose out on that. Whereas if you're a retailer, you capture all that spending.
Now, when we talk about the election stimulus, the boost, how can that be sustained? When you say it can reach to the third quarter, but after that, what does the market do, or what do companies do to help sustain that?
Well, promotions is one. Engage them to spend more, do a lot of A&P. That's one. Those work. But the thing is, usually when you do have a lot of liquidity, right, you tend to spend. I mean, the propensity to spend is quite higher if you do have money, right? So that's something that we do realize, and we expect it to spill over into 3Q.
Now, talking about spending, let's look at Gen Z now. It makes your report says it makes up around 28% of our population. What kind of opportunities or risks does this demographic shift create for consumer-facing companies and for long-term investors?
Well, for consumer names, right, they have to realize that the Gen Zs are your future. And they do have different risk appetite in terms of consumption. For example, Gen Zs do prefer, are willing to try other brands. At the same time, they prefer brands that resonate to their values. So that's an opportunity. But at the moment, those Gen Zs are early into the workspace, probably still students, so their disposable income is not that high yet. So bulk of yours purchasing power is still on, for example, the Generation X, the millennials, and so on. And we think that you have to attack both because you need to make money from those that have money to spend and then reinvest it into your Gen Zs. So when the time when they have their money, you are at top of mind in terms of investing or purchases.
Now, 28%, that's a large chunk of the population. When you look at the Gen Zs, and you said that although they don't have that much money, but their purchasing power is they're more likely to spend more than invest. Is that true?
Yes, because they're young. That's one. And usually, at least for a lot of people, when you get out of work, do you look at investing? Perhaps, but you would buy things that you wanted before as a student. I want to buy this. I want to travel this. I want to experience this. And then when they're ready to invest, that comes in a change in terms of a life cycle, right? You enter into a point where you think maybe I will look into my future and start investing.
How is the banking industry looking at that now? Since it's a big chunk of the population, and banks do like this kind of population to invest. Now, what kind of projects or programs do the banking system or the companies are doing now to instead of this group spending more, you also try them to invest more?
Well, number one is financial literacy. I mean, that's practical. All the banks are doing that. Even us from First Metro Securities, we are advocating financial literacy and telling a lot of investors or those Gen Zs, the earlier you invest, the better for you. Because the money gets bigger then when you retire, right? You invest now, it's cumulative, the interest piles up here and there. And when you're young, you can make mistakes. And you can fix those mistakes because you have years ahead of you, which you learn. So usually, at least for me, for my example is that when you're young, there's always a tuition fee in investing. You're not always a winner. You will lose money here and there, but at some point you have to realize that you have to embed it in yourself that I will not make that mistake again in the future.
Now, Mark, going back to this inflation, it's reducing pricing power. How are companies like SM and Pure Gold defending margins? And now, is there a role for alternatives like private labels or partnerships?
Well, the disinflation really affects those F&B more. But for the retailers, they can pass on prices. So usually, in view of this inflation, you have a lot of competition. A lot of these F&Bs are doing a lot of A&P spending. So that is good for retailer margins. And that's where, if you look at the performance of Pure Gold, SM, and Robinson Retail, we saw those gross margins don't go up just because of those factors.
Mark, before the program, we were talking about leakages. When we talked about tourism, online gambling, it seems that these are siphoning off consumer money. Now, how does this leakage affect the retail earnings? And what should smart investors track when this is happening? Okay,
so you look at it this way, right? Probably a very good example was the introduction of prepaid mobile. Before, the wallet share of household is food, school, bills, housing, then you can do leisure. Now you added telco expenditure. So that eats into your wallet share as a piece of the pie. Now with the introduction of gaming, some households allocate money for those type of leisure. So in terms of spending, some of the spending is going there, not really going to retail. So that's why we're looking. Same as travel, right? A lot of people, a lot of Filipinos, us would like to go to Japan to the point that Japan has to set up its own visa processing here in the Philippines to accommodate the demand. And that's something that is leakage in terms of the disposable income that's being created. There is wealth being created. You're seeing that savings go up. You're seeing the disposable income go up. It's just the spending is being spread out into other factors.
Now, are these leakages, are we seeing it to become a problem? But before you answer that, Mark, we're just getting warmed up. Follow the Money returns after a short break. You're still watching Follow the Money. We're still here with Mark Angeles of First Metro Securities talking about, before the break, we were talking about leakages. And one of the big leakages you were mentioning was online gambling. Now, is this something that we're looking at? Is this a problem that needs to be fixed? Are there a lot of people now, you're saying the money that the people have to spend with food, now travel and now we have an addition, which is on gambling. Is that something we need to be looking at?
Well, it depends on the household actually, right? But there's a pros and cons for online gaming. First of all, they contribute a lot to PAGCOR, which goes into helping the poor. A lot of here and there that helps a lot of those poor households in the Philippines. But at the same time, there's a negative impact to it. For example, some households tend to get drowned out in terms of gambling. So I guess the regulators have to find a way to balance that out. So a more balanced approach in terms of regulation, looking at the positives and the negatives, weighing those out, and fine-tuning the regulation in order to avoid all those, to limit those negative pitfalls.
Yeah, especially if it affects a lot of the poor sector of society.
Correct.
Okay, Mark, let's now look at your report that categorizes tariff scenarios from low to high. Now, which consumers' names would be most exposed if, let's say, a 10% plus tariff hits U.S. imports, and how important is diversification?
Well, let's start with the tariffs first, right? So we don't think the Philippines will have a direct impact in terms of tariffs. None of the consumer names have a direct impact. It's more a secondary. So there are consumer names that have businesses in Vietnam, Thailand, and Malaysia, or even in Indonesia. So if the tariffs in those areas at the end of August 1 is higher than we expected, then there could be a potential slowdown in consumption. So more on secondary round effects, a slower consumption means lower revenues for those names that have exposure in those areas.
So it's a snowball effect, lower consumption, higher prices,
correct.
In terms of the exports and imports that coming in here in the Philippines.
Yes.
How much of an effect will that be to our economy, and how can we actually mitigate that if that actually happens?
Well, per our computation, our partner DBS, we're a partner of DBS Bank of Singapore, right? At 17% tariff, the impact on GDP will be at 50 bips max. It will be lower at 50 bip max. But I think that is too aggressive because bulk of our imports to the U.S. or exports to the U.S. are chips, they are exempted at the moment. So the tariff can be good and bad in some ways. For example, we do import a lot of food in the U.S. like potatoes, beef, flour, right? If those tariffs come down, it will lead to cheaper prices of those items here. Thus, those are key raw materials that will lead to cheaper prices of some consumer names.
So in some way, it could be actually good for the economy.
Good for the economy, as long as you reduce those tariffs that the U.S. that we impose in the U.S. And most of our trade, actually, in terms of food, comes from Asia. So in terms of exposure, not so much. But keep in mind, the Philippines is an importing country, right? So this type tariffs don't mean that much to us because we import a lot rather than we export.
Now, Mark, looking at consumer loans, we see it rising in double digits, but so are the non-performing loans concerns. Are we priming the economy for another credit bubble, or is this a natural growth path?
Well, I won't go as far as credit bubble, but I think more on a natural growth path where you have more household with disposable income. I understand that report, right?
Yeah.
The report that the credit card levels at a
Yes.
certain level. But if you look at it as a percentage of GDP, including the salary loans, it's just 6%. So it's not that big actually. And if you look at the NPLs on those loans, they're lower than the actual NPLs that the banks are reporting.
But why would it be reported as going into danger levels in terms of the disposable income of the Filipinos compared to how much they are actually loaning?
Correct.
That percentage is really high, and we are actually being compared to other Asian countries like Vietnam.
Yeah. So you have to look at that report in one way, right? He mentioned this is the debt per household, this is the income per household. But you have to realize that the credit card penetration is quite low, and the banks are very selective who they give credit cards to. And that's why if you look at the NPLs, because they do have quality credit card borrowers, the NPL is quite low versus what is being reported, what is the total NPLs of the banks.
So we're not really actually seeing a danger levels here?
Not yet.
When you look at the percentage?
Not at the moment.
Yet?
Not at the moment, just because it's just 6% of GDP. And I would be worried if that goes up to 20%. Right? But at 6%, the economy can absorb, and the NPLs are very low as well. So they're practically provisioned by the banks.
You mentioned it's very the industry is strict in terms of approving credit cards
Yes.
to Filipinos. How many do you if there's any data? How many Filipinos do have credit cards right now?
I haven't taken a look at that in a long time.
But is it a big portion or
It's very small.
it's not enough?
I
a
think
big enough portion?
in the past, I did take a look at it. It's around 7 million. But my data could be wrong now, given the explosion in credit card. But it is an under-penetrated market, actually.
So not much of a problem now.
Not much of a problem now. And as long as the NPLs remain low as it is, there should be less concern.
Okay, Mark, we were looking at the younger generation a while ago, the Gen Zs. Now, your report also says the older generation sticks to trusted brands while Gen Z do chase innovation. How should companies now and investors balance brand loyalty versus the disruption that's happening in the market?
Well, you have to address both, right? So your growth means, for example, the Gen X, the older generation, is your market right now, but the Gen Zs is going to be a market in the future. They may not be contributing much to your income, but you have to reinvest into them. Then it's all about reinvesting in the brand. A very good example here is Jollibee, right? Our parents ate at Jollibee, bringing their kids part of Jollibee. Now those kids are grown up, are bringing their kids to Jollibee for parties. So that's
It extends through generations.
It transcends generations. And that's very important. It's all about investing in the brand, innovation, innovating on products that resonate to the younger generation as well. Those are very important. That's why R&D is very important right now.
Is that the reason why there are some brands that do last the test of time?
Correct. A good example, San Miguel, right? Our generation probably is Pale Pilsen. This generation is Red Horse. So they do have the brands that cater to this type of generation.
So you really, well, with disruptions happening also, other companies, they do need to adapt right now,
Yeah,
right?
they're adapting, they're doing their best by innovating, trying to put up new products here and there, just to see if it resonates to that target market.
As somebody who does a lot of research, how do you see the Philippine economy, let's say, in the next 5 to 10 years in terms of what the innovations that are happening, the advent of AI, everything that's new, the innovations that are happening?
Well, I don't know if you're going to agree with me, but I'm bullish on the Philippine economy, especially on the AI side, because AI means productivity. And I understand there are concerns about the BPO sector, but there will be jobs that will be taken out, but there will be jobs created as well. So that should balance it out. But in the overall scheme of things, right, these innovations create somewhat of a productivity. It improves the productivity of the Philippines. Thus, the economic growth should be okay. And if you go far back, right, we are very close to higher middle income in terms of middle class. Higher income from that. We just miss it this year. Probably next year we'll be there. And
it's very good to be optimistic,
Yeah.
right? Of what's happening, especially with a lot of the innovations that are happening. But Mark, let's go to the fun part now. We have what we call the rapid fire questions.
Sure.
Just answer yes or no.
Okay.
You don't need to explain. Just answer yes or no to all these questions. Okay. Let's start. Have you ever bought a stock just because a TikTok creator said it was a sure win? Yes or no?
no.
Have you ever panic sold then immediately regretted it while eating instant noodles?
Yes.
Do you secretly regret spending more on online shopping binges than on your stock investments?
No.
Oh, not even a mix. Okay.
Yeah.
Would you invest in a company just because their CEO is kind of hot? Yes or no?
Probably yes. Just to spice things up.
Okay. Have you ever found yourself flirting with someone just because they mentioned their favorite stocks to you?
No.
No? Okay. And finally, Mark, complete the sentence. Money is the root of all.
Well,
That's great, Mark. Thank you for your insights,
Thank you.
Mark. A lot of learnings, especially in terms of our economy, the innovations, and what's happening right now with the market. Thank you. Thank you for joining us.
Thank you very much. Thank you for having me.
Thank you, Mark Angeles, for joining us today on Follow the Money, your insights into the shifting landscape of the Philippine consumer market, from emerging winners and inflation trends to the impact of demographic shifts and evolving risks, have helped us understand where real opportunities lie and how everyday Filipinos can navigate these changes with confidence. And before we go, a quick reminder for anyone starting over after a tough loss from an eco-conscious tech investor, actor, and producer, Robert Downey Jr. Remember that just because you hit bottom doesn't mean you have to stay there. And that's it for today's edition of Follow the Money. I'm Robert Tan. Thanks for watching. Keep it here on BNC, the Bilyonaryo News Channel.